Here. So today I want to talk about Mohnish Pabrai's free lunch portfolio. This was started back in 2018, and essentially it's just a basket of 15 stocks to kind of buy each year. And if the same stocks are kind of on the list the following year, you keep those and you sell off the ones that are no longer on the list. And there's really three baskets that comprise the free lunch portfolio. Okay. But let's take a look at this article. It'll explain all of that. This article was from Forbes at the end of 2017. The 15 stock free lunch portfolio. So we're just going to read a few snippets from here and then get into what's happening currently with the free lunch portfolio. So investing in a low-cost ETF that mirrors the S&P 500 index is a great way to go for most long-term investors. Most people know that. However, over the past year, in columns on Forbes, our firm has described three investment strategies that do even better than the S&P 500, a lot better. Each strategy is a 12-month investment in 5 stocks selected based on certain unique criteria that extensive backtesting shows identify winners. So you've got these three baskets. The first is the Uber Cannibals, companies that are aggressively buying back their own stock, right? They're cannibalizing themselves. The second basket is Shameless cloning, created by copying value stock pickers, kind of identifying the best value investment professionals out there and copying their recent stock buys. And then the third basket is Spinoffs, right? A collection of recent corporate cast-offs, companies that, smaller pieces of companies that are spun off to kind of entail their own corporate entity. So we've got a little bit of backtesting here. For basically the year of 2017, the Cannibals was up just over 30%, while the S&P was around 21%. Shameless cloning from February, kind of end of February 2017 through mid-December 2017, shameless cloners were up 20% compared to 14.5% for the S&P 500. And it says here, even in a year when the S&P 500 has been on steroids and has trounced most active managers, the Uber Cannibals and shameless cloning portfolios have prevailed. Pay close attention to this one. Of course, we should not fixate on such short-term performance, but the 2017 performance, at a minimum, provides further evidence of the soundness of these strategies. All three strategies significantly outperform the S&P 500 over our 17-plus years of backtesting. So that's kind of a background about the magic formula. So let's jump to today and what's happening with the magic formula portfolio. So it has not been kind. 2018, 2019, and 2020 have not been kind to the free lunch portfolio. It says here, since inception on January 1st, 2018, the free lunch portfolio is up 1% annualized versus the S&P 500, which is up 13% per year. Okay, the S&P 500 has trounced the free lunch portfolio so far, but 3 years is also a very short duration, right? So that's interesting. Apparently 1 year in this Forbes article was enough to, at minimum, provide further evidence of the soundness of these strategies, whereas 3 years of actual results, not back-tested, but actual results, are called, what does it say? Very short duration. It's kind of dismissing what's been happening over the last 3 years. Although there have been some changes made to the free lunch portfolio in this 2021 edition of stock picks. So clearly, the underperformance was enough to kind of get Pabrai to make some changes to how the free lunch portfolio is structured. So let's take a look at what some of those changes are. The free lunch's underlying strategy is a sound one. It biases the portfolio towards businesses that generate and return a lot of cash and have wide moats. Over the years, the algorithm has picked up stakes in exceptional businesses, including NVR, Alibaba, Google, Micron, Chipotle, Berkshire Hathaway. The algorithm is a great stock picker. However, it tends to sell businesses that are compounders, Uber Cannibals, or spawners way too early. This leaves money on the table and stunts the power of long-term compounding. So for any of you who have followed Mohnish Pabrai, it's clear kind of within the last year that he's really shifting his focus from buying $1 for 50 cents to identifying these long-term compounders where he can hold on to them rather than get in and out every couple of years. So he talks about NVR and how, being so aggressive in buying back their shares has just created incredible returns for NVR. The free lunch strategy is also very good at selecting spawners, which are businesses that persistently add and incubate related and unrelated businesses. So it's kind of, spinoffs are the small pieces that bigger companies tend to kind of separate to become their own companies. Spawners are the parent company that's kind of creating all of these smaller companies under the umbrella of the parent company and generating value that way. So really the whole takeaway here is that the free lunch portfolio, the way it has been set up, it's just sold these great businesses far too early. Okay, so there's a new framework for the free lunch portfolio. As a result of this introspection, we have made 3 key changes to the free lunch portfolio. First, although we will continue to leverage the algorithm as a stock picking tool in December and April of every year, we will not automatically follow its buy and sell decisions. So this is a big change, guys. The way the portfolio used to be set up, the free lunch portfolio, there were kind of these rules about how the 5 stocks in each basket were identified, okay? Kind of a rigid set of rules. Now we're shifting over to something where, there's judgment that's being inserted here, which is a bit of a surprising development for me personally, to see that happening with the free lunch portfolio. I can't say I'm upset about it. I mean, we get the judgment of Mohnish Pabrai now, kind of going into these stocks in the free lunch portfolio. So, I see that as a positive in the short term for our prospects of outperformance. On the other hand, the thing that really drew me to the free lunch portfolio initially was the idea that, it's kind of a mechanical approach to investing each year. It doesn't necessarily need Mohnish Pabrai, his input, to be generating these stocks. Now we're getting into a kind of a more active situation here. Okay, as long as, Pabrai is kind of at the top of his game. But, in the long term, there could be some challenges with having an active approach like this for the free lunch portfolio. But, Pabrai's still got a long runway, so I'm not too concerned about that. So not going to automatically follow the buy and sell decisions of the algorithm. We will only make changes if doing so improves the quality of the portfolio. Second, we have replaced the spinoffs bucket. So no more spinoffs. Okay, that basket is gone. Now we have this spawner bucket because they are superior businesses to buy and hold. Third, we will not be required to select 5 businesses from each of the 3 buckets. The number from each bucket will depend on the businesses that the algorithm offers. We want to invest in compounders, not buckets. So the idea here is 5 from each of these buckets was just too rigid. Say, in 2022, you've got the spawner bucket, which has all of these great potential opportunities. And then you look over here to the cannibal bucket, and there's just not much compelling that's there. Now, Pabrai has the kind of freedom to pull more stocks from one of these baskets and maybe less from another one to come up with the same total 15 stocks each year. We will continue to evaluate the spawners and shamelessly cloned ideas in December and the Uber Cannibals in April. That's kind of how it's been since the start at the beginning of 2018. So let's talk a little bit about these constituents for 2021. The spawners, Berkshire Hathaway, clearly a great spawner. Restaurant Brands International, QSR. Now this is one of Pershing Square's bigger holdings, Bill Ackman. So, that's interesting to see this in the spawner bucket. Starbucks. I'm kind of curious about Starbucks. I don't actually see Starbucks as a spawner. Maybe it's because it's a franchise and there's more and more franchise locations opening up each year. Maybe that's kind of how Pabrai is seeing Starbucks as a spawner. We got Microsoft, clearly a spawner. Brookfield Asset Management. Now, Brookfield Asset Management, I first learned about back when I invested in, what was that company? I've forgotten about it because I lost money on it. I'm sure it'll probably come to me before the end of this video. It's terrible that I'm forgetting that. See, I have 2 kids and I haven't been sleeping enough. This is what happens to memory. When you have 2 kids under 2, the mind turns to mush. But anyway, let's keep going. Shameless cloning. We've got Google. Now, the Children's Investment Fund, I have no idea what that is. I was under the impression back when this started, when the free lunch portfolio started, Pabrai had identified about 9 different funds to clone. Okay, it seems he's opening that up a bit because this is the first mention I've heard from of the Children's Investment Fund. But in any case, we have Google, Chipotle from Bill Ackman's Pershing Square, Micron. Now, Micron is interesting because, again, Himalaya Capital, Li Lu, that's never been on the list of people that Pabrai is cloning in this free lunch portfolio. And it's also interesting because Micron has shown up in previous free lunch portfolios as I think both a Pabrai clone and an Appaloosa management clone with David Tepper. You see Alibaba there from Appaloosa Management. That's an interesting one because Alibaba could just as easily have gone in this spawner bucket. And I've been digging into Baba quite a bit recently because I had a target buy price on Baba around 216. And it actually hit my buy price within the last couple of weeks. I did some videos recently about Alibaba. One of the most interesting developments around Alibaba is this kind of disappearance of Jack Ma. For the last couple of months, no one has seen Jack Ma in public. And this is shortly after he kind of spoke against the Communist Party in one of his tech presentations. And of course, just recently I watched Moving the Mountain, which is kind of based on Li Lu's life growing up with the Tiananmen Square protests, the kind of fighting for democracy in China. And, pretty dark what the government did back in 1989. And it's kind of, interesting to see this parallel with what's happening with Jack Ma in China. I mean, we don't know what's happening, quite honestly, with Jack Ma, but it's a very interesting development with Alibaba, and it's really why I've kind of passed at the current moment from investing in Alibaba. And then finally, to round out the shameless cloning basket, we've got Seritage Growth Properties, which was a Pabrai pick. Back in May, was it May? Yeah, it was May. Pabrai was loading up on Seritage Growth Properties, somewhere around $7 per share. I think it might be $14 or $15 a share now. So it's been a double for Pabrai already. And that's one of the issues I see with the free lunch portfolio. There's such a lag, right? I mean, when you're looking at 13F filings, you already have kind of a month and a half to 4.5 month lag. But with something like the free lunch portfolio, where you're only buying once a year, there could be a substantial lag between when we're buying based on this cloning technique and the actual fund managers that we're cloning bought. So that's a little bit of a concern. The last basket is Uber Cannibals. Okay. And the interesting thing here with the Uber Cannibals, the first three are insurance companies, and the second two are financial services companies. And I did a quick check on kind of to what extent these companies are cannibalizing themselves, to what extent they're buying back their own stock. Assured Guarantee reduced its number of shares outstanding 41% over the last 5 years. Now that is very aggressive. They have 41% less shares today than they did 5 years ago. Primerica reduced 21%, still pretty strong. Globe Life reduced 20%. Navient reduced 49%. Wow, 49%. Almost half of the shares outstanding in 2015 is what it's left with today. That's very impressive, very aggressive. It's only impressive if they're buying back, at a price below intrinsic value. So, that's probably worth taking a look at. But very aggressive buybacks nonetheless. And then the last one, Discover Financial Services, 31% fewer shares today than 5 years ago. So, I confirm these are all pretty aggressive Uber Cannibals here. I don't love that they're all kind of in the insurance financial services arena. It's an area I really don't understand. And I personally would have liked to seen a little bit more kind of sector diversity in the Uber Cannibals basket. But, Pabrai, he bought an insurance company, I think just a couple of years ago. So I have to assume that he knows insurance pretty well. And that he's probably able to determine that there's significant value here, is my assumption. So can't complain too much about that. And just to round it out, let's see what else Pabrai has to say here. Right, if you're a new investor, equal weight these 15 stocks between now and early January 2021. It talks a little bit about rebalancing. I'm not going to really go into that too much. You guys can read about that. If you're in a taxable account, it's a good idea to maybe sell the losers just before a year and sell the winners just after a year to make the most of the tax treatment there. And these are the stocks to sell. If you bought in 2020 and you're buying again in 21, how to kind of reshuffle. It's recommended to sell these 7 stocks and replace them with current year stocks. 5 of the 7 were down. Fiat Chrysler and First Service were up. So yeah, that's just kind of an update. A lot of changes with the free lunch portfolio. Again, it surprised me. I really expected this to be a thing where, all right, we've got 17 years of backtested data. We're feeling good about the strategy. There's been quite a few changes in just the first 3 years of implementation of this free lunch portfolio. But like I said before, it seems to be shifting to something a bit more active, where Pabrai is giving himself a bit more control over what gets added to the free lunch portfolio and what stays out. So, I have to view that as a positive because he is such an incredible stock picker, active investor. So anyway, guys, just wanted to give you that update. Let me know what you guys think of these changes for the free lunch portfolio with Mohnish Pabrai. Very curious to hear from you. And with that, I will leave you guys and see you in the next video. Take care.